Mortgage default insurance is put in place to protect the lender in case you default on the mortgage. Now, even though this mortgage default insurance is in place to protect the lender, the premium that comes with this insurance is passed on to you. Hello everyone, it's Spencer Gray Mortgages, and I wanted to make a video on mortgage default insurance, kind of discussing it. But before we get into that, I'll just ask if you can please like the video, subscribe, share with a family member or friend who's looking to learn more about the mortgage or real estate industry, and it helps my channel grow and reach more Canadians. So as I said, mortgage default insurance is in place to protect the lender, but this premium gets added to your mortgage, so it's getting passed on to you as a one-time premium on top of your mortgage. The three mortgage default insurers in Canada are Sagen, Canada Guarantee, and CMHC. The cost of the premium that gets added onto your mortgage depends on your down payment and the mortgage amount. But later on in this video, I'm gonna share my screen and then share it on this screen so you guys can see it. And I'll show you what different premiums will look at based on different down payments on different mortgages amounts. The premium tends to range of up to 4% of your mortgage amount, and there's kind of a sliding scale of your down payment. Every 5% down, the premium decreases. So what makes a mortgage insured? So if you have less than 20% down on a property, that mortgage is going to be insured, meaning it requires mortgage default insurance. The reason for this is because the less equity you have in your home, or the higher the loan to value is, the more risk there is for a lender. So mortgage default insurance kind of takes that risk off of the lender's hand, and they absorb that risk instead. So how does mortgage default insurance work? So let's say you were to default on your mortgage. The lender would start something called the power of sale process, which is the process of them selling your home in order to regain their funds. Let's say from the time that you purchased your home to when the lender starts the power of sale process, home values have dropped. They're not going to get enough money out of the sale of the home to regain their funds. So that's where mortgage default insurance comes in. Mortgage default insurance, the insurer will pay the difference between what the house sold for and how much money left over for the lender to regain their money. So now I'm going to go over some of the benefits to mortgage default insurance. The first benefit is that it allows people who are having trouble saving up for that 20% down payment open the door to the housing market. That 20% down payment is a lot of money, especially when home prices rise. So not everyone can save for that. So it allows you to get into the housing market with a less down payment. Another benefit is insured mortgages typically get better interest rates because there's not as much risk on the lender. It's more being absorbed by the mortgage default insurer, so the lender's willing to offer better rates. Now, some of the downsides to mortgage default insurance is obviously you have that premium you're gonna have to put on top of your mortgage, and you'll be paying interest on that premium like you would with the mortgage balance. The insurers tend to have strict guidelines, and the insured parties who are involved in your deal, they actually get final say if you get approved for this mortgage. So they have guidelines that you need to fit into in order for you to obtain the funding for the home. So those guidelines include certain credit score requirements, an amortization of 25 years or less, nothing over that, a purchase price of less than $1 million. It has to be an owner-occupied property, meaning you plan on living in it, and then there has to be, the property has to meet certain requirements as well. So now, as I promised, here are some the different examples of some premiums you'll be paying based on purchase price and down payment. So here's a calculator I found online. Let's put the purchase price in at $500,000. Ontario. And now down payment percentages, let's go 5%, 10%, and 20%. So these are the amount you'll be paying towards your down payment. So $25,000, $50,000, and $100,000. So mortgage insurance, right in this section next to where it says mortgage insurance. So on a $500,000 home with a 5% down payment, your mortgage insurance premium is going to be $19,000. Now on a $500,000 home with 10% down, your down payment will be $50,000. That default insurance premium is going to be $13,950. And then on a $500,000 home with a 20% down payment, which means you're putting $100,000 down, that insurance premium is going to be $0. Now, total mortgage amount, like I said, that insurance premium gets added on top of your mortgage. So on the first scenario with the 5% down payment, total mortgage amount is going to be $494,000. On the second scenario with the 10% down, your total mortgage amount is going to be $463,950. And on the third scenario with the 20% down payment and 0% premium, your mortgage is going to be $400,000. So is it worth getting an insured mortgage, or should you save up that 20% down payment? This question really lies on you. You know, if you're having trouble saving up for that 20% down payment, like 20% is a lot to save up. So an insured mortgage could be the route for you. If you're investor minded and instead of tying up all that liquid cash into a 20% down payment, you're thinking more of put the minimum down payment and use that money to get better returns elsewhere, that's another option. Or maybe it's your goal to just pay as little interest as possible over the lifetime of your mortgage, and that in that case a conventional mortgage would be your route because you wouldn't be paying interest on that premium. That's why it's important to speak with a mortgage agent who's going to ask the right questions, get a understanding of your situation so they can best advise you and put you in a product that's right for you. If you'd like to chat with me, I've linked my calendar link in the description below so you can book a call. Thanks for watching. I hope you've got something out of this video. If you did, please like, subscribe. Also comment below any questions. I'll make sure I answer all of them. I might even make a video out of it. I also have created 3 homeowner guides if you're interested. The first one is a first-time homebuyer's guide. If you're just thinking of purchasing a home, go download that one. I have another one that's about refinancing, and the third one is you got your offer accepted, you now need to obtain financing. So if you're interested, links in the description below, go check those out. Keep an eye out for next week as I'm going to be posting another video.